Hi everyone, it's Jab out with another video, and today I'm going to be talking about SoFi stock. It's a personal finance company, an online bank really. Provides credit cards, loans, investing, personal banking, a wide range of online banking functions. The stock is down 46% in the past 365 days. However, in the past month and a half, basically year to date, it's up about the same amount. It's up 46%, which obviously doesn't get it back to where it needs to be, but it's still a very nice return if you've been bought in year to date. Way off its 52-week highs around $13, but decently off its lows of $4. There's a lot of potential here. It just recently had its Q4 results that were absolutely excellent. They were a big catalyst for the year's gains. I want to go through the current state of the company. I want to go through the most recent report, its full year results, decide whether I think this is a buy or a hold going forward. Like and subscribe if you're enjoying the video. Let's get into it. Obviously, SoFi stock took a beating last year, and that was mainly due to valuation in my opinion. There's a wider crunch, mainly inflation-based and interest rate rises, causing a wider crunch on highly valued stocks, SoFi being one of them, being unprofitable, valued on a price-to-sales basis. But throughout the year, they clearly showed this is a business rolling on all cylinders, not just from a financial point of view, which I'll talk about in a second, but from January, sorting out its regulatory approval to become a national bank, and adding many product improvements, particularly to SoFi Invest, introducing margin trading, in options trading, and increasing the trading day by 4.5 hours. These are just all to increase its competitiveness in an increasingly competitive environment. From a financial point of view, the results were excellent. 60% growth year over year in net revenue to 1.57, nearly $1.6 billion at 60% growth. That is really quite impressive at this scale. Adjusted EBITDA of 474%. Of course, this is on an adjusted basis and with not particularly impressive EBITDA margins, and on an adjusted basis of just 9%, but that increase is certainly impressive. GAAP net loss came down quite a bit. I'm not particularly happy with it still being a loss-making company, and at $320 million of loss for 2022, that's not particularly impressive, but is a significant decrease from the year prior, where it was nearly $500 million. Pretty much as you could ask for this business. The segments, lending was really strong, up 45% year over year. That is the majority of the revenue for this company, with $1.1 billion of that 1.57. The technology platform increased 62%. Financial services, 189%. Overall, really strong performance. For Q4, they had a 58% year-over-year revenue growth, so right in line with the full year numbers. Every quarter, they increased revenue on a quarter-over-quarter basis at a decent rate, in my opinion. Quarterly adjusted EBITDA was $70 million for Q4. That increased spectacularly over each quarter, and was up 14 times year-over-year basis, which is absolutely spectacular. Graphs like the one on the left really put SoFi's performance into perspective for me. Annual adjusted net revenue has more than tripled since 2019, and this against the backdrop of problems with student loans, essentially student loan pauses, student loan potential, student loan forgiveness, when the bulk of this business was in student loans in around 2019. So it's so impressive they managed to diversify themselves and continue to expand in their user base and diversify away purely from student loan refinancing. Membership growth numbers for this company, which obviously being an online bank / fintech, are very important and a key indicator, have been very strong. 51% year over year growth, adding 480,000 new members for now 5.2 million. Of course, you can see this year over year growth number has been declining somewhat, and there's definitely deceleration in the percentage growth, and that is kind of a law of large numbers at some point. If you look at it in absolute terms, in the actual number of new members, this most recent quarter has actually been a relatively strong quarter compared to other years. Yes, it is a year-over-year decrease in terms of net new ads. However, in my opinion, this is still a really bullish indicator. They're still adding a consistently high number of new members, and a much higher number than they were adding in, say, Q4 2020. Look at that, 350,000 added compared to 480,000 just 2 years later. Really impressive in my opinion, and not a cause for concern. I am slightly concerned at the guidance going forward. Of course, this has to be taken in context of we're potentially going into recession. SoFi are obviously forecasting for things like this. Higher interest rates environments make lending less attractive to the general public. Adjusted net revenue, they're expecting of between 430 and 440 million. That's actually going to be flat on a quarter-over-quarter basis, but up 34 to 37% year over year, which is still absolutely respectable growth, but significant deceleration. But of course, I believe that the wider macroeconomic factors must be taken into account, and a business growing 34 to 37% is still pretty impressive in my opinion given this context, and they're predicting adjusted EBITDA margins to be around the same, between 9 and 10%. In the most recent quarter it was 9%, so not much change there. Of course, this should be something we're monitoring going forward. If this continues to decline on a quarter-over-quarter basis, then there can definitely be some cause for concern, but right now I think given the macroeconomic environment, I think this is completely reasonable. One thing that is perhaps a cause for concern in this business, at least in the short term, is the student loan originations numbers. In 2020, nearly $5 billion of student loan originations. 2021, nearly $4.3 billion. And in 2022, just $2.24 billion. This is a massive decrease, and it's primarily due to governmental policies. It was more than made up for by huge growth in the personal loan originations, from nearly $2.6 billion in 2020 to just shy of $10 billion in 2022. Really impressive growth, and that led to the lending products being by far the largest division of this company at $1.1 billion of revenue. But SoFi started as a student loans originations company, basically refinancing student loans, and it's still wants to be a significant part of this business, and it's really underperformed at the minute because of government regulations, so it was completely out of SoFi's control. The Biden administration is planning to make some quite large changes in the student loan repayment field. Of course, depending on the individual, this can be a wide range of consequences, and for me, I think there will be some need for refinancing going forward. I don't think SoFi's business is going to be incredibly affected by this, but I don't think they're going to get back in the short term to those $5 billion loan origination numbers. To a certain extent, it looks like the Biden administration is essentially refinancing some student loans by proxy. I think this is bad for SoFi in the long term. However, I don't think it really matters in the long term, because as they become a more diversified bank, they can offer lending products in other fields. The mortgage business is only really just getting started and has been massively hit by essentially the rise in interest costs. However, the personal loans business absolutely rocketed. So I think overall, as SoFi becomes a more diversified beast, I don't think this will be so much of a problem, but in the short term, it's going to hurt. The business fundamentals look fantastic, and for the most part, I think it's a thoroughly investable business. Of course, the valuation is certainly a stumbling block. It's much lower than the price-sales ratios it was trading at in 2021, where it's around 15 times sales. Now currently trading for around 4 times sales, but I don't think that is an adequate way to measure any business's valuation, in my opinion. On a price-to-book ratio, which is where other banks will be measured, SoFi is obviously a more asset-light bank in a way, but it's still price-to-book value is still absolutely relevant for this company. 1.2 times book value is probably in line with how many big US banks trade. I think is a completely reasonable valuation for this company. However, it's not consistently profitable, so that is a big downside for this company, and does not look to be becoming consistently profitable in the near future. Overall, I really like SoFi as a business. I'm loving the growth that it's enacted this year. I am a shareholder in this business, and I'm quite happy to be invested at these prices, although I would be a little happier if management had a bit more of an emphasis on becoming cash flow positive and actually recording some proper earnings, not on an adjusted basis. However, I've dealt with that via allocation, just allocating a maximum 5% of my portfolio to SoFi. It's not even really there yet, it's around 3% right now. I'm quite content with this. The stock has increased 47% year to date, so I'm quite happy with that, as I bought in around December. So I'm completely happy with where SoFi is here. That being said, I don't think it's a screaming bargain by any means. It obviously is a very difficult company to value because it's not producing any earnings to speak of, so it shouldn't be given a wide leash. I like this business, but of course I'm not a financial advisor, and you should, if you want to buy this business or you want to sell this business or whatever, you should not take my advice. You should speak to a registered financial advisor and do your own research and due diligence. That being said, if you enjoyed the video, like and subscribe. Let me know what you think of SoFi in the comments down below. I'll see you again next time.